As of the close of the regular trading session on June 18, 2026 at 4 p.m. Eastern Time, the United States stock market is currently closed, and Ondas Holdings, Inc., trading under the ticker symbol ONDS, finished the day at a price of $9.27 per share, marking a positive move of 1.64% during the intraday session. While most market participants looking at their mobile alerts see this as just another standard single-digit tech stock experiencing routine small-cap volatility, the immediate reality under the surface is far more dramatic, because Ondas just announced a massive definitive agreement to acquire Cyberhawk Holdings Limited for $125 million, a strategic move that completely shifts the company from a basic hardware manufacturer into an absolute titan of critical infrastructure intelligence and automated visual analytics. This major acquisition news dropped right alongside their massive collection of over $110 million in fresh orders secured in the second quarter of 2026 alone, which catches the broader investment community completely off guard, because the standard narrative around this company has long been that they are a slow-moving utility communications developer struggling to gain immediate commercial traction. This creates a fascinating conflict between market expectation and fundamental reality, a dynamic that smart participants using a high-quality individual brokerage account love to dissect because it reveals where retail assumptions diverge sharply from institutional accumulation. The conventional wisdom surrounding small-cap defense and automated drone technology is that these businesses burn through capital endlessly without ever securing long-term high-margin software contracts, yet Ondas is actively subverting that exact narrative by adding high-margin asset management and software capabilities right to their balance sheet. When you look at how modern market participants approach self-investing through a digital individual brokerage, there is a natural tendency to focus entirely on the massive market capitalization heavyweights like Tesla stock, Apple stock, or Nvidia stock, because those names dominate the financial headlines daily and offer massive liquid options markets. However, active capital tracking across premier online investing sites reveals that a substantial volume of sophisticated retail wealth is quietly shifting into specialized infrastructure names where the underlying numbers tell a completely different story than the headline price action. For anyone managing their own capital through a customized automated platform like Schwab Intelligent Portfolios or utilizing professional investment help to construct a diversified tech basket, understanding the specific mechanics of a specialized asset like Ondas becomes absolutely essential. The expectation among casual watchers was that Ondas would remain a niche play, heavily dependent on slow-moving corporate sales cycles with North American freight railroads, but the reality of their recent expansion into autonomous defense systems, stratospheric maritime domain awareness for the United States Navy, and comprehensive enterprise data capture proves that their addressable footprint is widening at a pace the market has simply failed to fully price into the current $9 handle. Analyzing the recent daily price swings and trading volumes reveals an intense battlefield between short-term momentum traders and long-term institutional buyers. During the latest session, the stock established an open of $9.41, reached an intraday peak of $9.46, and dipped down to a low of $8.92 before institutional volume flooded back into the order book to close the equity firmly in positive territory at $9.27, with a substantial volume of over 64 million shares changing hands. This volume level is particularly striking when you look at standard liquidity metrics across popular retail applications like the Robinhood app, or sophisticated execution systems such as the Interactive Brokers platform, as it demonstrates that the equity is experiencing massive turnover and heavy institutional positioning. Throughout the earlier weeks of June 2026, the equity experienced a significant pullback from its multi-month highs near the $13 range, an intentional cooling off that many analysts attribute to macroeconomic pressures and high interest rates weighing heavily on growth assets. But the technical support found near the $9 level suggests that long-term accumulation is firmly taking place. Comment below how many shares of Ondas Holdings you currently hold in your portfolio, or if you are actively waiting for a deeper pullback before deploying fresh capital. The structural tension between expectation and reality becomes even clearer when you look at the sophisticated trading tools used by modern retail participants, where tracking option order flow and institutional block trades on platforms like the Fidelity Trading Platform or Interactive Brokers stock trading reveals a steady rise in bullish sentiment despite the recent headline correction. Many individuals managing their retirement assets through specialized vehicles like Fidelity IRAs or active trading accounts on the SoFi trading platform often overlook microcap infrastructure because they assume the risks are too asymmetric. But the recent influx of capital into small cap tech ETFs shows that a broader tide is rising. When people open their accounts on everyday tools like the Robinhood app or check their performance via Fidelity Investments, they are looking for entities that possess actual contracted backlogs rather than just theoretical commercial concepts. Ondas has managed to secure over $110 million in fresh defense and autonomous technology orders within a single quarter, which directly shatters the retail expectation of stagnant growth and positions the business as a highly active industrial contractor with a rapidly expanding global footprint. To truly understand what this entity represents, we have to look past the rapid day-to-day fluctuations on your preferred investing sites and look directly at what the enterprise actually builds and operates. At its core, the business operates through two primary corporate divisions, Ondas Networks and Ondas Autonomous Systems, each designed to solve completely separate but deeply interconnected problems within industrial environments. The Networks division specializes in creating proprietary, highly secure, and incredibly reliable wireless data communication systems designed specifically for mission-critical industrial networks, serving major clients like large Class 1 freight railroads that require absolute network uptime across thousands of miles of track. The Autonomous Systems Division, which includes American Robotics and Aerobotics, builds fully automated field-deployed drone platforms that act as remote data collectors, providing continuous monitoring, security, and industrial analytics without requiring a human pilot on the ground. By layering the newly announced acquisition of Cyberhawk on top of this existing ecosystem, the company is effectively integrating advanced enterprise asset management software and industrial data processing directly into their hardware stack, allowing them to sell full-scale visual intelligence directly to massive global utilities and oil and gas conglomerates. This sophisticated business model is exactly why specialized wealth management professionals and self-directed investors using advanced systems like the Interactive Brokers platform or managing portfolios through Fidelity Brokerage look beyond simple quarterly earnings misses to evaluate the total contract backlog and long-term recurring software revenue potential. The historical financial reports from past years show a business that spent heavily on research, developmental integration, and expensive corporate acquisitions, which naturally created a highly negative net income profile that scared away conservative retail buyers who strictly look at basic price-to-earnings metrics on simple financial portals. However, the reality of their current execution in 2026 demonstrates that these heavy early investments are finally translating into massive industrial scaling, as seen by their selection as a high-altitude stratospheric balloon provider for the United States Navy and their expanding presence at major global defense exhibitions like Eurosatry. For an investor utilizing automated tools like a SoFi robo-advisor or building an individual brokerage portfolio entirely centered on long-term technological trends, the company presents a textbook case of a high-risk, high-reward infrastructure play that is actively transitioning from a speculative developer into a fully functional commercial operator. Looking forward into the upcoming quarters of 2026 and beyond, the central battleground for the stock will continue to rest entirely on the sharp contrast between market expectations regarding their execution speed and the operational reality of their balance sheet management. The primary catalyst on the immediate horizon is the full corporate integration of the Cyberhawk acquisition, an event that needs to demonstrate immediate cost synergies and a rapid expansion of high-margin software as a service revenue to justify the $125 million valuation to skeptical analysts. Additionally, the continuous fulfillment of their massive defense contract backlog will be highly critical, as any unexpected supply chain friction or operational delays could cause short-term traders to abandon the equity, causing sharp downside volatility that would test the resolve of retail holders using standard Robinhood stock trading futures or active SoFi investing accounts. There is also the constant lingering risk of capital dilution, a structural reality that frequently impacts microcap growth companies requiring continuous cash injections to scale up manufacturing, which means investors must monitor the cash burn rate with absolute vigilance. Ultimately, this stock provides an incredible study in how market expectations can often obscure a rapidly evolving fundamental reality, forcing self-investing participants to think far more deeply about asset allocation than if they were simply buying blue-chip equities like Apple stock or Nvidia stock. The general market narrative has labeled this business as a speculative, cash-burning drone manufacturer, but the reality of their recent financial metrics, massive contract wins, and major strategic acquisitions shows an enterprise that is systematically building a highly defensible, fully integrated industrial data and communications platform. Whether you choose to track this equity through advanced option analytics on Interactive Brokers, included as a speculative growth slice inside your Schwab Intelligent portfolio setup, or manage it actively alongside your Fidelity mutual funds, the asset demands an analytical approach that prioritizes long-term contract accumulation over short-term price noise. As the market prepares for its next active session, the core question remains whether the broader investing public will begin to recognize the true structural transformation taking place beneath the surface of this small-cap equity, or if the price will remain suppressed until the corporate earnings completely force a reevaluation of its true industrial value. Disclaimer. This video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Black Splash. Don't forget to like, comment, and share this video to support the channel. Harding.